Have you taken on a side gig to supplement your income? Well, if you have, then you might want to pay attention because it's that time of year again. Nope, not the holidays, it's tax season. Today we sit down with Thanneermalai, Managing Director of Thannees Tax Consulting Services, to discuss whether your side gig income or profits from share trading is taxable.
Actually, all income is taxable in Malaysia. The only income that's not taxable in Malaysia is capital gains. There's an exception. When you deal with real property, then you're subject to real property gains tax. Otherwise, only income that is earned or income that is derived in Malaysia, that's taxable in Malaysia. So, otherwise, all capital gains is not taxable in Malaysia. Actually, there's no difference between income and gains. If gains are of an income nature, then they are taxable. But if gains are of a capital nature, then they are not taxable. It's as simple as that. If you are dealing in property, let's say you are dealing in, and you're a regular dealer, you're dealing with 10 properties. You're buying properties and selling, buying, selling on a regular basis. Your frequency is high. Then that's income because you are generating that as part of your business, as part of your trade. And therefore, it becomes income. Whereas if you actually bought that 1 or 2 or 3 properties, kept it for 5 years and 10 years, and therefore you wanted to keep it as an investment, then that is a capital. And the gain you make on that capital is actually capital gain. That's something that you are actually growing on a longer term basis, and you make a gain. That's called realization of the gain, and that's capital gain. If you actually have generated income out of your side gigs, like for example, if you're in employment and if you have an internet site or a platform and you're generating this income in the evenings, etc., or any odd hours you have, that you're doing it on a regular basis because that is business. Because even if you do it once in a while, but if your intention is to do it on a regular basis, it becomes business because that's a term called adventure in the nature of trade. Even if you do it once, but if you have the intention to actually make a profit within a short period, then that falls within something called an adventure in the nature of trade, which is a one-off gain, also can be subject to tax. You've got to be very careful. Share trading is an area of real problems. This is an area where the tax authorities, they have the right to tax if you're regularly dealing with it. If you on, off and you buy on this on a regular basis, like last year, if you think about it, everybody was on the computer buying, and they're all going to be subject to, if the revenue wants to attack them, they may be all subject to income tax because they were doing a lot of trades, and therefore they are caught. So it's high time the Inland Revenue and the Ministry of Finance Policy Division should decide. Because if you want to encourage this kind of trading, then don't tax them. If your intention is not to tax, then come up with clear guidelines. Tell us that perhaps if you keep it for 1 year, or perhaps you do 20 transactions a year, you will not be covered, or maybe more than 50 transactions, then that's it. We need policy guidance. Otherwise, we are living in cloud cuckoo land. We don't know what is going on, and the taxpayers are left, don't know when they're going to be caught. Effectively, now most taxpayers can be caught because they're regular traders. You looked at something called Schedule 6, and that specifically spells out like your fixed deposits. If you have fixed deposits, that's exempt. And there are other income that is exempt. For example, when you retire, if you receive a retirement gratuity, it specifically says. Or it will tell you that certain individuals or certain companies are exempt. You look at Schedule 6, there's a particular schedule there. You got to look at it, and there are hundreds of those exemptions. You got to look out for those exemptions, and that's what exemption is. It specifically will take you out of the whole tax net. No, dividend income is not taxable because it's already been taxed at the company level. It's called single tier dividend and it's not taxable. They'll come after you, that's all. They'll come after you and they'll probably catch you and they'll say you have not filed your return correctly and you'll be subject to a minimum 45% penalty. But these days, the penalty rates can go up to 100%. So watch it. Not advisable not to declare. Please declare.
Do you have any personal finance or money questions? Post them down in the comments below or email us at ringgit@bfm.my.